Hello friends, in this video we will study important question answers from chapter National Income Accounting, that is Unit 1 National Income and Related Aggregates, taken from class 12, subject Economics, book Introductory Macroeconomics. Question 1. If in an economy the value of net factors income from abroad is 200 crore rupees and the value of factor income to abroad is 40 crore rupees, identify the value of factor income from abroad. Answer. Given net factor income from abroad NFIA is equals to 200 crore rupees. Factor income to abroad is equals to 40 crore rupees. To find factor income from abroad, formula factor income from abroad is equals to NFIA plus factor income to abroad. Substitute the values. Factor income from abroad is equals to 200 plus 40 is equals to 240 crore rupees. So correct answer is C, 240 crore rupees. Question 2. During COVID-19, the present government provided monetary relief to daily wage workers to meet their basic needs. While estimating national income, how shall you treat this payment? It will be not included in the national income. So answer is B, not included. Question 3. When nominal gross domestic product GDP is 840 crore rupees and price index is 120, then the real gross domestic product GDP will be. Answer. Given nominal GDP is equals to 840 crore rupees, price index is equals to 120. To find real GDP, formula real GDP is equals to nominal GDP divided by price index multiplied by 100. Substituting these values, so real GDP is equals to 840 divided by 120 into 100 is equals to 700 crores. So correct answer is A, 700 crores. Question 4. If the GDP deflator is 150% and real GDP is 1100 rupees, the nominal GDP will be. Answer. Given GDP deflator 150%, real GDP is equals to 1100 rupees. So formula is equals to nominal GDP is equals to real GDP multiplied by GDP deflator divided by 100. So substituting these values, so nominal GDP is equals to 1100 multiplied by 150 divided by 100 is equals to 1650 rupees. Question 5. A representative consumer had to spend 1400 rupees on purchase of a given basket of commodities in the year 2015 to 16. Due to inflation, CPI of the year 2019 to 20, taking 2015 to 16 as base year was 120. How much amount the consumer had to spend on purchase of the same basket of commodities in the year 2019 to 20? Answer. Given CPI 2019 to 20, base year 2015 to 16 is equals to 120, base year spending 1400 rupees. To find spending in 2019 to 20, formula spending in 2019 to 20, base year spending multiplied by CPI divided by 100. Substituting the values, so spending in 2019 to 20, 1400 multiplied by 120 divided by 100 is equals to 1680 rupees. So answer is B, rupees 1680. Question 6. Which one of the following is an intermediate expenditure? Answer B, expenditure on maintenance by a firm. Question 7. Economic territory can be defined as the geographical territory administered by a government within which persons, goods and capital circulate freely. Question 8. In a simplified economy, circular flow of income is based on various assumptions. Identify which of the following is not an assumption of circular flow of income. Answer D. Factor income earned by households is entirely saved. Question 9. Read the following statements carefully. Statement 1. Final goods include only those goods which are consumed by the households. Statement 2. Tractor purchased by a farmer can be characterized as a final good. In the light of the given statements, choose the correct alternative from the following. Answer B. Statement 1 is false and statement 2 is true. Question 10. Read the following statements. Assertion A and reason are. Choose one of the correct alternatives given below. Assertion A. Gifts received from abroad are not included in the estimation of domestic income but are included in the estimation of national income. Reason are. National income includes only factor income. Answer is D. Assertion A is false but reason R is true. Question 11A. All machines are not capital goods. Describe. Answer. The end use of the machines determines whether it is a capital good or not. Capital goods are those fixed assets of the producers which are used in the process of production for several years and which are of high value. Therefore, only those machines which are used for further production are capital goods. B. Sales of petrol and diesel cars are rising particularly in big cities. Analyze its impact on gross domestic product (GDP) and welfare. Answer. Impact on GDP. GDP is equal to sales in case there is no change in stocks during the year. Increase in sales of cars during the year indicates increase in GDP. Impact on welfare. Rising in sale of cars leads to increase in consumption of petrol and diesel. Both these fuels use emission of harmful gases and carbon dioxide. It increases environmental pollution, which adversely affects the welfare of the people. Question 12. Net factor income from abroad can never be negative. Defend or refute the given statement with valid argument. Answer. The given statement is refuted. Net factor income from abroad is the difference between factor income earned from the rest of the world and factor income paid to the rest of the world. If the value of factor income paid to the rest of the world is greater than the factor income earned from the rest of the world, the resulting value, that is, net factor income from abroad, can be negative. Question 13a. Discuss briefly how the money received from the sale of a second-hand car will be undertaken in estimation of national income. Answer. The money received from the sale of a second-hand car will not be included in the national income of the country as it does not contribute to the current flow of goods in the economy. The value of that car has been counted in national income in the manufacturing year. B. Define the problem of double counting in the estimation of national income. Discuss two approaches to correct the problem of double counting. Answer. Problem of double counting in the estimation of national income arises due to counting the value of commodities more than once. This leads to overestimation of the value of goods and services produced in the economy. Two approaches to correct the problem of double counting are: first, final output method. According to this method, value of only the final goods and services should be added to determine the national income. Second, value added method. According to this method, sum total of the value added by each producing unit should only be taken in consideration. It means the value of intermediate consumption should not be considered. Question 14. During a given year, the nominal national income increased by 14%, while the real national income increased by only 6%. Population increased by 2%. What has caused the difference between nominal income and real income? How much increase in real per capita income? Answer. First, change in nominal income over a year is on account of A. Change in quantity of goods and services, and B. Change in price level. However, change in real income refers to change in quantity of goods and services only. Second, therefore, a change of 14% in nominal income over the year is partially on account of 6% change in quantity of goods and services, and the remaining 8% must be on account of rise in general price level. Third, real per capita income rise is equal to rise in real national income minus rise in population is equals to 6 minus 2 is equals to 4%. Question 15. Circular flow of income in a two-sector economy is based on the axiom that one's expenditure is others' income. Do you agree with the given statement? Support your answer with valid reasons. Answer. Yes. The given statement is correct. In a two-sector economy, the firms produce goods and services and make factors payments to the households. The factor income earned by the households will be used to buy the goods and services which would be equal to the income of firms. The aggregate consumption expenditure by the households in the economy is equal to the aggregate expenditure on goods and services produced by the firms in the economy, income of the producers. Question 16. Management of a water polluting oil refinery says that that is oil refinery, ensures welfare through its contribution to gross domestic product. Defend or refute the argument of management with respect to GDP as a welfare measure of the economy. Answer. No, the given statement is not true. The value added by oil refinery to the gross domestic product (GDP) may also be polluting the nearby source of water. Such harmful effects that the refinery is causing to people and marine life is not penalized for the same. Thus, these negative externalities are not ensuring the welfare of the economy through gross domestic product, that is GDP. Question 17a. Suppose a ban is imposed on consumption of tobacco. Examine its likely effects on gross domestic product and welfare. Answer. Ban on consumption of tobacco will bring down production of tobacco. Since it is counted in GDP, GDP will fall. The ban will improve health in general, it will thus increase welfare. B. Higher gross domestic product GDP means greater per capita availability of goods in the economy. Do you agree with the given statement? Give valid reasons in support of your answer. Answer. Higher gross domestic product GDP means greater per capita availability of goods in the economy. This statement is not always true. First, if the rate of population growth is more than the rate of growth of GDP, the per capita availability of goods and services will fall. Second, GDP doesn't count for changes in inequalities in distribution of income. If the rising GDP is concentrated in a few hands, per capita availability of goods in the economy might not increase. Question 18a. Define circular flow of income. Explain the phases of circular flow of income. Answer. Circular flow of income. Circular flow of income is how income is generated in the production process, then gets distributed among factors of production and ultimately gets disposed of in the form of consumption expenditure on goods and services by households. Phases of circular flow of income: households, firms, factors services, land, labor, capital and enterprise, consumption expenditure on goods and services, factors payments, rent, wages, interest and profit, goods and services. First, generation phase. Income is generated in the production phase by firms. Second, distribution phase. Income distributed among factors of production and flows from firms to households. Third, disposition phase. Income is spent by households on goods and services and flows from households back to firms. B. Write the difference between stock and flow. Give examples. Answer. Stock variable. Stock variable is a variable whose magnitude is measured at a particular point of time. It is not time dimensional. Examples are capital, wealth, fixed assets, distance, population, money supply, etc. Next, flow variable. Flow variable is a variable whose magnitude is measured during a given period of time. It is time dimensional. Examples are income, expenditure, export, import, GDP, production, etc. Question 19a. Differentiate between final goods and intermediate goods with example. Answer. Final goods. Final goods are the goods which are purchased for consumption by consumers, households and for investment by firms. Example: milk purchased by consumers, machinery purchased by a firm, etc. Value of final goods is added to national income. Intermediate goods. Intermediate goods are the goods which are A. Purchased for resale purposes by a firm in the same year, or B. Completely used up in the production process. Examples are milk purchased by a dairy, wheat purchased to make biscuits by a factory, etc. Value of intermediate goods are not to be added to national income, as these are included in the value of final goods. Adding value of intermediate goods in national income leads to the problem of double counting and overestimates the national income. B. Differentiate between consumption, consumer goods and capital goods with example. Answer. Consumption, consumer goods. These are the final goods which satisfy the wants of consumers directly. For example, wheat, clothes, washing machines purchased by consumers. Next, capital goods. These are the final goods which help in the production of goods and services and have expected lifetime of more than 1 year. Example: tools and equipment, machinery purchased by firms, etc. Question 20. Define consumption of fixed capital, depreciation, gross investment and net investment. Give the relationship among these. Answer. Consumption of fixed capital, depreciation. It is the fall in the value of fixed assets due to normal wear and tear and expected obsolescence. It can be calculated by dividing the value of fixed assets by its expected life in a number of years. Gross investment. It is the addition to the stock of capital of an economy during a given period of time. Next, net investment. It is the net addition to the stock of capital of an economy during a given period of time. And the relationship among these is net investment is equal to gross investment minus consumption of fixed capital, that is depreciation. Question 21a. What domestic territory includes? Who is normal resident of country? Answer. Political frontiers including territorial water and airspace, ships and aircrafts operated by residents between two or more countries, fishing vessels, oil and natural gas rigs, floating platforms operated by residents in the international water. Fourth, embassies, consulates and military establishments of the country located abroad. Normal resident. Normal resident refers to an individual or institution who ordinarily resides in a country and whose center of economic interest lies in that country. Note: citizens of other countries who reside in India for more than 1 year become normal residents of India. B. Give precautions while estimating national and domestic income. Answer. Items not to be included in national income and domestic income. Precautions. As for second-hand goods, sale and purchase. W. Windfall gains like winning from lottery, horse race, etc. No contribution to flow of goods and services. I. Intermediate goods value already included in the value of final goods. F. Financial transactions like sales and purchase of shares, debentures. No contribution to flow of goods and services. T. Transfer income and payments. No contribution to flow of goods and services. Besides, production of services for self-consumption is not included. Difficult to measure market value, but production of goods for self-consumption is included, as it contributes to current production. Question 22a. Differentiate between factor income and transfer income with example. Answer. Factor income. Income which is received by factors of production for rendering their services in the production process. Factor income is included in national income. Examples are rent, wages, interest and profit. Transfer income. Income which is received without rendering productive services in return. It is not included in national income. Examples are old age pensions, scholarships, etc. B. Define national income NNPFC and domestic income NDPFC. Answer. National income NNPFC. It is the sum total of factor incomes generated by the normal residents of a country within the domestic territory of that country and in the rest of world during an accounting year. It includes NFIA. Next, domestic income NDPFC. It is the sum total of factor incomes generated within the domestic territory of a country by residents and non-residents during an accounting year. It does not include NFIA. Question 23. Which of the following will be included in national income? Give reasons. First, commission and brokerage. Yes, these are productive services. Second, construction of flyovers, hospitals, school, building. Yes, these are part of capital formation. Third, free meals, clothes, bonus, rent-free house, medical facilities, retirement pension, salaries and wages in cash to employees. Yes, as these are part of compensation of employees. Fourth, dividend, undistributed profit. Yes, as these are part of opening surplus. Fifth, interest paid by the firm to the bank. Yes, the interest has been paid on loan taken for productive purposes. Sixth, interest paid by the individual to the bank. No, the interest has been paid on loan taken for consumption purpose. Seventh, dividend received by RAM from a foreign company. Yes, as it is a part of FIFA. Eighth, expenditure on advertisement, scientific research, entertainment allowance. No, as these are intermediate expenditures. Ninth, salaries paid to Indian working in US Embassy in India. Yes, it is a part of FIFA. 10th, dividend received by a foreigner from investment in Indian company. No, as it is FITA, FITA. 11th, old age pension, scholarships, remittances, GST. No, as these are transfer income payments. 12th, Expenditure by government on street light, free medicines and education. Yes, as these are part of government final consumption expenditure. 13. Purchase of trucks to transport goods by a company. Yes, it is a part of the gross domestic capital formation. 14. Payment of fees to a lawyer engaged by a firm. No, this is an intermediate cost. Question 24. Which of the following will be included in domestic income? Give reasons. First, dividend received by Ram from a foreign company. No, as it is not generated in the domestic territory of India. Second, salaries paid to Indian working in US Embassy in India. No, as it is not generated in the domestic territory of India. Third, dividend received by a foreigner from investment in Indian company. Yes, as it is generated in the domestic territory of India. Fourth, salaries paid to Japanese working in Indian embassy in Japan. Yes, as it is generated in the domestic territory of India. Fifth, domestic household services performed by a woman. No, production of services for self-consumption is not included as it is difficult to measure market value. Sixth, compensation to the victims of a cyclone. No, as it is transfer income. Question 25. Differentiate between real GDP, GDP at constant price, and nominal GDP, GDP at current price. Answer: real GDP or real national income, GDP measured at base year prices. Nominal GDP or nominal national income, GDP measured at current year prices. Real GDP affected by change in quantity of physical output. Nominal GDP affected by both change in price and quantity of physical output. Real GDP measures the true performance of growth of the economy. Nominal GDP not necessarily measures true performance of growth of the economy. Real GDP is equal to nominal GDP multiplied by 100 divided by GDP deflator. Real national income is equal to nominal national income multiplied by 100 divided by price index. Question 26. GDP as a true indicator of welfare but has some limitations. Explain. Answer: GDP as a true indicator of welfare has following limitations. First, affected by changes in price. Without any increase in real output, GDP can increase due to increase in price. Second, distribution of GDP. GDP does not ensure that goods and services are evenly distributed in an economy or not. If there are large numbers of poor people in country with high GDP, how can it be said to be a true indicator of the welfare of people? Third, composition of GDP. If any increase in GDP is due to increase in the production of war ammunition, liquor, etc., then welfare of people may not increase. Fourth, externalities. There are two types of externalities. A. Positive externalities. Positive externalities refer to benefits caused by one entity to another without being paid for it, like parks for which people don't pay but it increases their welfare. B. Negative externalities. Negative externalities refer to the harms caused by one entity to another without being penalized for it, like pollution produced by a factory. GDP doesn't take into account positive and negative externalities, but the welfare of people is affected. Fifth, non-monetary transactions. Non-monetary transactions like services of housewife, kitchen gardening are not included in the estimation of GDP because their market value is difficult to estimate, but these transactions increase the welfare of people. Question 27. Given the following date, find the values of operating surplus and net exports. Items. First, wages and salaries in crore 2400. Second, national income 4200. Net exports we have to find. Fourth, net factor income from abroad. Fifth, gross domestic capital formation. Sixth, mixed income of self-employed. Seventh, private financial consumption expenditure. Eighth, net indirect taxes. Ninth, operating surplus. 10th, government final consumption expenditure. 11th, consumption of fixed capital. And last, profits. First, national income. Second, is equal to first, wages and salaries plus operating surplus plus sixth, mixed income of self-employed plus fourth, net factor income from abroad. So operating surplus is equal to second minus 4th minus 6th minus 1st. So equals to 4200 minus 200 minus 400 minus 2400 is equals to 1200 crore rupees. National income second is equal to 7th private final consumption expenditure plus 10 government final consumption expenditure plus 5th gross domestic capital formation plus net exports minus 11 consumption of fixed capital minus 8 net indirect taxes plus 4 net factor income from abroad. So net exports is equals to second minus 7 minus 10 minus 5 plus 11 plus 8 minus 4 equals to 150 crore rupees. Question 28. Suppose only one product X is produced in the country. Its output during the year 2017 and 2018 was 100 units and 110 units respectively. The market price of X during the years 2017 and 18 were rupees 50 and rupees 55 per unit respectively. Calculate the percentage change in real GDP and nominal GDP in 2018 using 2017 as the base year. Percentage change in real GDP is equals to difference in real GDP divided by base year real GDP multiplied by 100. So 500 divided by 5000 multiplied by 100 is equals to 10%. Percentage change in nominal GDP is equals to difference in nominal GDP divided by base year nominal GDP multiplied by 100. So 1050 divided by 5000 multiplied by 100 is equals to 21%. Friends, we have completed Unit 1 National Income and Related Aggregates important question answers. If you like the video, kindly like it and share it with your friends. Thank you for watching.